Please read this disclaimer carefully before proceeding further. Welcome traders to this week's analysis of dollar index. My name is Vic. Thanks for joining me here. Now what we do here is that we monitor dollar's strength, because everything that we have in financial world is directly or indirectly dependent on dollar in some respect. So if you're trading, let's say, major forex pairs, or if you're trading gold, or if you're trading any commodities or anything like that, then dollar is going to make a difference. So that is why we always start our week with the analysis of dollar. So what we have right now, let's look at on higher time frame. This is the monthly time frame right now, and monthly time frame has come into this previous structure right there, and then it started to go up, and we have been actually monitoring this particular part for a long time. We were monitoring around here. It touched the water cluster moving average and started to go up, and similarly when it came here, it started to go up. Now because it has been bearish for quite some time, it is quite acceptable, it is quite predictable, and probably, like, highly probable as well that we might see 1 month of bearish candle, which we are expecting here. That did not happen, and we are still expecting in the month of March, because the month is not over yet. We are still in the half of the month, so towards the end of month it can turn into bearish candle. That's one possibility. If that does not happen, then that possibility is in the next month. Now you see the market has come back into these moving averages, and they're acting as resistance, so as to say, and that is why the market is retracing a little bit, and this can push dollar once more down. There is a possibility that it can fall one more time before start to move any higher, because you see, if it needs to respect all the barriers, all important barriers in the market, like these moving averages and all that. Last time what happened, the market fell down, there was alternate candles, and then started to go up after this engulfing candle. Now similar sort of thing can happen, there are different kinds of reversal patterns which appear in the market, and this is forming a little different one, little complex one. So if this turns into a red candle, which is bearish candle, then next month is going to be bullish, otherwise next month can be bearish. So you see, the problem here is that we are expecting at least 1 month to be bearish before dollar starts to go higher. Now in extreme bearish case, it can fall down to this level of 86.86 as well, where we have this 200 moving average, which is yellow in mustard in color, right? Okay, so that's what we have. Now if I'm just going to go through very quickly what we have been looking at. So we have a W pattern here. As you can see here, there is a W pattern, and that basically means that market is expected to actually go somewhere around here. I mean, it's completely up to you whether you believe that or not, but that's what can happen on multi-year basis, because we are looking at monthly time frame, so it may take long period of time. Right now we are in consolidation, we are running in a channel, as you can see, and this channel kind of looks like this, right? Not exactly like that. Let me just quickly draw it better way. So this is something like that. So the market has went up, has gone up, and then fell down, and then now what do you expect? You expect market to go up at least to the mid of the channel, right? That's what we expect, and that's why I've been saying the DXY can actually reach near about 95-96 area. That's quite a possibility there, but obviously it will have to take its own time. It has taken few months to reach this level, so it may take few months to reach there, and it will go through their entire transition process, going up and down, creating bear candles, bull candles, and all that, right? Similarly, what happened here, what happened here, what happened here. So you cannot expect this to straight away go up there. I mean, that is also one of the possibility, but usually market does not do that. Okay, so this is what we have on higher time frame. Now let's talk about simply the updates. So we have been looking at this particular zone, and I've been talking about 89.89 level for a long time, right? And market has respected that level at 88.89. it has never been able to close below that, and that's why the market has been going up. So I do not expect market to actually go and violate the previous low here. I'm expecting it to maybe it may fall down a little bit, but I'm expecting it to go higher. So if I go to the daily time frame, on daily time frame the market has come into these moving averages, and it is quite possible that it can go all the way to this area, which is near about 92.792. Why? Because that's the 200 moving average. It has come very close there, close to it. Last time when it was close to that was around here. Since then it has never visited that 200 moving average, and it's quite possible that it can come to 92.792, near about that level. And once it has reached, then we can expect a downward move, because 200 moving average is going to push it down. We can expect that, but when it reaches there, we'll see how it plays out. For now, we can see that we have this W pattern appearing, and the market has actually fallen down. It has come into the previous structure right now, which is acting as kind of support, and that is why it can actually start to push back up. But that's the bias that we have from higher time frame. As traders, we must analyze both bearish and bullish opportunities. So let's see what is going on right there. So we have this M pattern appearing, and which can push the dollar to near about this level of 90 something, and to be precise, it can be 90.737 or 90.471, near about those levels. So somewhere around here it can fall down because of this M pattern. However, you see we have a W pattern appearing as well, so that can push the price up. So depending on confirmation on either side, we can make use of both opportunities. If it starts to move higher and if we get a confirmation, we can trade long. If we get a confirmation on the break of this midpoint around 91.368, and if we get a confirmation, then we can trade short. And if I bring in original analysis, this is what we had. So this was our FCP zone, original FCP zone, and since then market has been rising and it has been following these arrows. It reached these FCP zones. Once it reached that FCP zone, you know what to expect. You expect market to reverse or show at least some reaction. It fell into the next one, went back into the FCP zone once again, fell through it, and then went back into this and started to fall back down. And that is why I'm saying this is forming an M pattern, and these levels are still very, very important. The downward levels are still very important, and if the market starts to form a W pattern, it will have to go through this 91.914 level, which we identified a few weeks ago. It is still valid. So if it starts to go higher, right now it is standing on 91.601, which we identified a few weeks ago, and once it has started to go higher, then it will have to come into 91.914, and once it has broken through that, then it will go higher. So what is the plan? You wait for a confirmation to do something like this. If you get a confirmation, okay, I'm going to remove these arrows, and if the market starts to break down and goes below, then you go all the way to this level of 91.386, and if that gets broken down, then you basically start to go or to these levels one by one. And remember, at these levels you can always take your profits. You can also start new positions, you can get out. You can, basically all these levels can act as support and resistance, and or trade opportunities. You either take the profits or you start new positions at all of these levels, depending on the confirmation on in the direction. Now if the market goes through this level and gives a confirmation, then the next level is obviously going to be this one, and this is how we play. This is the level which is kind of extreme level. Remember, we were just talking about it, right? So this level is still there and it has not been used so far, so we will see how it actually plays out. Remember, again, I'm trying to remind you again that even in this month it can turn into a bearish candle, right? So the market may actually fall all the way down to form a bearish candle and end this month as a bearish candle. Okay, so that is always a possibility. So if you're thinking of actually taking huge long positions and all that, then you should be aware of that, right? So this is our analysis on DXY. Hope you enjoyed this, found this useful. This is a very, very in-depth analysis and giving all the trading plan. So if you found this useful, make sure you support this channel, because your support goes a long way, and your hits and likes, hits and comments help us a lot in reaching out to other traders with these videos. So I'll see you in the next one. Have a good trading week next week. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com, and under training section you'll be able to see and submit this form.